you've ever paid for something with your phone, transferred money using an app, or checked your bank statement online, then you're already part of a multi-billion-dollar industry. It's called fintech, and it's changing economies around the world.
Millennials broke up with cable. Gen Z is breaking up with banks. They don't trust the institutions that hold their money. They don't like waiting on hold, and they definitely don't want to visit a branch that closes at 4 p.m. For a generation raised on instant everything, traditional banking feels like dial-up internet in a 5G world. And now the breakup is official. Gen Z is moving billions out of old banks and into apps faster than any generation in history. Not because they hate money, but because they hate how money is managed. This is the story of how a generation lost faith in the system, built its own, and turned that rebellion into a $100 billion fintech revolution. In 2008, the world watched the financial system burn. Banks that called themselves too big to fail nearly did. Families lost homes. Students saw tuition rise while job markets collapsed. For anyone born after 1997, that crisis wasn't a headline. It was the background noise of childhood. They saw parents argue about bills. They saw savings vanish. They heard the word bailout before they even learned budget. When you grow up watching banks crash and get rescued while ordinary people don't, trust becomes impossible to rebuild. By 2025, surveys show only 12% of Gen Z say they trust traditional banks a lot. That's the lowest confidence in modern history. Visit any bank branch today. The fluorescent lights hum. The line drags. The teller asks for an ID, a signature, a pen that's chained to the desk. Then step into a fintech app. A swipe, a tap, done. It's not just convenience, it's philosophy. Traditional banks still operate like it's 1999. Overdraft fees, hidden charges, and business hours. Gen Z lives in 24/7 mode. They trade stocks at midnight. They split dinner bills with a tap. They send rent over Venmo before the waiter clears the table. They don't just want faster banking, they expect it. And when banks charge $35 for an overdraft while Cash App and Chime charge $0, the choice is obvious. Gen Z inherited one of the most brutal financial realities in history. They hold over $180 billion in student loan debt, entering adulthood already behind. Wages stagnate, housing prices soar, and the old formula, save 10% and buy a home, feels like a joke. Traditional banks became symbols of that system, rigid, expensive, and inaccessible. Meanwhile, fintech startups promised empathy. Chime advertised, banking that has your back. SoFi sold freedom from student loans. Robinhood promised to democratize finance. For a generation drowning in interest, these weren't apps, they were lifelines. Between 2017 and 2024, fintech investment exploded from $30 billion to over $110 billion per year. Startups replaced marble lobbies with code. Chime offered checking with no fees. Cash App turned peer-to-peer payments into culture. Robinhood gamified investing, onboarding 22 million users by 2022. Revolut, Monzo, and N26 turned banking into sleek, global lifestyle brands. For Gen Z, these weren't alternatives. They were the default. You can open an account in 60 seconds, get your card in the mail, track spending with emojis, and freeze it from your phone. Banks take pride in heritage. Fintechs take pride in user experience. That's why, by 2025, 1 in 3 Gen Z Americans say their main bank is a fintech app. Older generations saw money as private. Gen Z sees it as part of identity. Venmo comments. Cash App handles. Crypto wallet flexes. Finance became social. When someone pays $15 for coffee, it's not just a transaction. It's a post, a data point, a status symbol. Fintech understands this better than any bank ever will. They design for attention, not transactions. Bright colors, notifications, gamified streaks, instant dopamine. The result? banking no longer feels corporate. It feels personal, expressive, even fun. But behind that fun is the most powerful data capture engine in financial history. Traditional banks know your balance. Fintech knows your life. They know when you tip more, when you stress spend, when you impulse buy sneakers at 2 a.m. Every swipe, every transfer, every split the bill request becomes behavioral data. That data feeds algorithms that sell you new products, investing apps, credit builders, even crypto accounts. Gen Z doesn't trust banks, but they do trust their phones. And that's all fintech needed. Because in 2025, the phone is the bank. For a brief moment, Gen Z believed crypto would replace banking entirely. Bitcoin, Ethereum, Solana, digital freedom. No middlemen, no fees, no gatekeepers. Then came FTX, Celsius, and a cascade of collapses that wiped out billions. Crypto didn't die, but the dream of a purely decentralized economy cracked. Yet the lesson stuck. Gen Z doesn't want central control. Even as crypto faded, the spirit of self-custody remained, powering apps like Strike, Zebedee, and Lightning-based wallets. Fintech learned to merge both worlds, speed of apps, autonomy of crypto, and now the lines between them blur more every day. By 2025, digital wallets handle over $9 trillion in annual transactions globally. Apple Pay alone processes more volume than most national banks. Fintech is no longer a startup sector. It's an economic superpower. Every dollar that leaves Chase or Wells Fargo doesn't just hurt profit margins. It erodes trust in the entire system. Traditional banks now scramble to copy the very apps they once mocked, launching digital-only branches and AI assistants. But Gen Z can smell corporate catch-up a mile away. When you spend your life online, authenticity is currency. In 2023, Silicon Valley Bank collapsed in 36 hours, the first bank run of the social media era. Depositors didn't line up outside branches. They just opened their apps and moved billions with a swipe. The crash was a warning. Digital trust is faster than regulation. If Gen Z can abandon a bank in seconds, what happens when they abandon all of them at once? Governments are terrified, because if people no longer trust banks and don't need them, entire monetary systems lose control. That's why central banks are racing to launch digital currencies, CBDCs, to compete with private wallets. The next financial war won't be over interest rates. It'll be over interfaces. Who owns the screen where you see your money? Who controls the code behind it? That's the battle for the future of finance. For all its innovation, fintech isn't innocent. Apps that promise freedom also push microloans to teenagers. Buy now, pay later apps encourage impulse shopping. Robinhood turns trading into a casino with confetti animations. Behind the friendly interfaces lie the same pressures that once drove credit card debt, just faster and frictionless. For a generation already financially fragile, the line between empowerment and exploitation is thin. Fintech didn't eliminate risk. It just reskinned it in pastel colors and rounded icons. Boomers collected assets. Gen Z collects experiences. They don't dream of owning a bank account full of cash. They want flexibility, mobility, and control in real time. To them, money isn't stored. It flows. This is why crypto, fintech, and cashless apps fit so perfectly. They reflect a world where ownership matters less than access, and speed matters more than security. The catch? When you value access over ownership, someone else owns the gate. Governments are finally catching up. The EU pushes the Digital Markets Act. The US debates licensing for neobanks and crypto wallets. China tightens its grip on Alipay and WeChat Pay. The question isn't whether fintech will be regulated. It's who will win control when the dust settles. Silicon Valley, Wall Street, or the state. Each has a different goal. Banks want stability. Tech wants data. Governments want visibility. And caught in the middle is Gen Z, a generation trying to escape the system, only to build a new one that looks eerily similar. The fintech boom is far from over. As AI learns to predict spending, your phone may soon negotiate bills for you. Biometric wallets may replace passwords. And the next bank CEO might be a machine. But the core issue remains trust. Fintech didn't destroy banks with technology. It destroyed them with belief. When a generation stops believing in institutions, it starts believing in itself. That's why Gen Z is rewriting finance from the ground up. Not with protests, with apps. Millennials broke up with cable. Gen Z is breaking up with banks. They want speed, transparency, and fairness, not vaults and fees. They don't care about brand heritage. They care about results. And as they move their money into fintech, they're reshaping a $100 billion industry that banks once thought was untouchable. The question is simple. When the next crisis hits, who will Gen Z turn to? A bank that failed their parents, or an app that feels like a friend? The answer will decide who controls money for the next 100 years.